All right, ladies and gentlemen, I hope you had a wonderful weekend. It was a historical post-election move last week, and now coming into this week, investors are not letting go of the gas pedal, and they are expecting a lot more. So we're going to talk about it. It sounds crazy, but people at Bank of America, and I know a lot of other people have put out some crazy targets, but they are talking about the S&P 500 hitting 6,600 before the inauguration. That means about 10% by the time we get into the new year. So we got a lot to go over. I'm going to talk about the Trump trades that we had last week, and I'm even going to elaborate on that and give you some more info on what you should be looking for. Whether we get a melt up, looking for the sell the rally, there is going to be opportunities. You know about a lot of them, but still, depending on how things play out with bonds, inflation, and the actual reality of this story, that's going to open up the door for a lot of plays. So we're going to go over that. I have the plays, I have the keys, all that good stuff. What I need from you, a thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open, youtube.com/The Stock Market. We will see you there in the morning, baby. Run it.
Working to the couch, it's the 2020 last. Live in the hills, but still get a spread. Started with a live, but still reinvest it. Feel how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down.
Right off the bat, we have a couple of things this week. There's still going to be a few more earnings. You will be getting NVIDIA in a couple of weeks, so keep that on your calendar. But besides that, now that we have the election out the way, we even had Powell last week, and he did not upset the status quo or the golden path. We are firmly in risk on season. So that's where all these targets are coming from. You guys got to let me know. We had surveys for the election and all of that. What do you think about 6,600? Post it in the comments. Is that insane or not? Do you like it or not? And shout out to the long term. But fact of the matter is that window from now until the inauguration, this is where people are going to be looking to play all of these Trump trades. Now, with everything going on, with all of the emotion and how it's played out so far, I'm going to tell you there are some guidelines that you need to follow. So this is where we can elaborate on some of the Trump trades that we talked about last week or the last few weeks. But the first thing you got to understand right now, how bonds are moving, equities, regional banks, the Mexican peso, all of these different asset classes that are responding to the so-called Trump trade. You have to understand we do not really know what is going to happen. Why do I say that? Because everything right now is just based upon presumptions and ideas. Right now, the assumption is that Trump is going to cause economic activity to go up, but then his policies from immigration all the way down to tariffs is going to cause inflation. People are getting worried about this. Even Powell last week, he talked about it a little bit and said they're going to respond once they do their analysis and see it. But for now, Wall Street, the bonds, the expectations, retail traders, everybody is reacting to something that hasn't really happened yet. So this is what you got to watch out for. That's why from now until January, until there's the inauguration, Trump even put out some plans leading into it, and people are going to go off of that. But until the inauguration, until real changes start to happen, and then we see the consequence of that, it's going to be very easy to get ahead of yourself and assume all of these things. And really, that's what the market is doing right now. So expect the next few weeks of sussing this out. It's not saying that everybody's wrong. Some things will be right. Some things will be really, really wrong. But over the next few weeks, we're probably going to try to navigate and price all of that stuff in. So keep that in mind. Things will be very fluid. The second thing now is, when do you sell the rip? This is what I was telling you, and I've been telling you how difficult it is going to be between now and January. There is going to be risk on, but like we talked about ahead of time, that Trump risk on, it is eventually going to lead to a sell the rip. But now, when does that happen? If everybody is getting this melt up and now talking about 6,600, how do you know when to take profits or that this rally is going to end? And one answer is going to be tighter financial conditions. I know you haven't heard about this in a while. Powell used to really care about this, but fact of the matter is things like the data, the 30-year, the 2-year, and even some of the job stuff too, but really just the bonds, even if spreads start to widen. But if you notice the 30-year starts to go above 5, the 10-year starts to go above 5%, the 2-year goes above 4.5, those will be moments where financial conditions are tightening and you will start to see the rally slow down. So as far as when I think things are going to end, I'm going to be waiting for this. And this is something to keep in mind because now it relates into the third thing, but the bonds, this whole idea of Trump inflation and what is going to happen to the economy. It's one part economic activity increases that could help inflation go up. The other part is the deficit and spending and not being as conservative. But that's what we talked about last week. There is a lot of reasons why people want to be conservative right now, especially when it comes to inflation. So until we see it, I'm not going to be worried about it because I think it would be wildly unpopular if Trump really did bring about a lot of inflation. So we'll see how it all plays out. But the fact of the matter is this Trump trade, both how people get worried about it and how it actually plays out, it is either going to lead the bonds to get blown up or they are eventually going to stabilize. And that is what you should be watching over the next few months. This is going to be a big key here because it is going to lead into a lot of different plays. So what we're going to be watching, does the 10-year bottom, does the 30-year bonds, do they start to bottom as well? What does that mean? Even after policy and worry and fear, if the bonds stop climbing rapidly, then that is going to open up the door to a lot of different plays. And pretty much what everyone's going to be looking for, the bonds should bottom out until inflation actually returns, not necessarily just the threat of it. And if that does happen now, and if you do start noticing over the next couple of weeks, if we get a melt up or whatever happens and the bonds just stop going higher on the yields, that's going to open up the door for these long duration plays. Biotechs, REITs, small caps, and banks. I think these will be the next set of opportunities. We talked about regionals. You have seen what happened with the small caps, but now biotechs and REITs, once the bonds stop getting blown out, and if they do actually bottom, that will be the next opportunity of a Trump trade. So watch out for that. That's the third one. And then now Europe and China. This is the other thing we got to talk about. We talked about this in advance, and here's kind of the best part. If you do feel as if you missed the melt up, or if it does go to 6,600 and you're like, no, I'm not participating in this, I think you're going to have an opportunity in Europe and China because these will become an opportunity after they bottom out in reaction to what we're doing. Again, a strong dollar and the way things are playing out with the Trump trade. And if Europe and China start reacting, China already has stimulus, Europe is also cutting. And if they start to get positioned for what we are about to do, they're going to have a little bit of short-term pain, but eventually they're going to be able to rise up with everything else. So that's still going to be a lagging element to all of these trades over the next couple of weeks. So watch out for that. And the final thing, man, I think it's very simple. You are going to rally until the bonds break. That is what is defining now until the inauguration. So as long as the longer term bond yields and the inflation metrics do not blow out above 5% and the bond market is so terrified of the deficit and all of that, then there is no reason for things not to hold up, especially after the earnings. Until we get like a black swan or something like that, there will be no reason to bring it down. Maybe Japan in December, but we are going to have to wait till there. Otherwise, if we do start rallying and the bonds do get fearful and it gets really hot and the bonds go nuts, then that's going to be a different story. And then that will, again, be our tightening financial conditions and start to end or signal the end of this Trump rally. So we'll see where that all takes us, but I do hope this info helps. The last couple weeks have been wild, so add this to everything you got, and I think you will be good to go. So that is surprisingly key number one. And then key number two, we have the CPI this week. So this is our other set of big data, and it's also going to be our first chance to actually respond to data that's not the election. And remember, we did just get Powell. So this can slow down the market rally, but I doubt it. That's what I'm putting here. Yeah, the CPI can add to this fear. If the core CPI does tick up again, people are already worried about inflation coming back with policy and activity and all these other things. That will get people worried a little bit, but you're still going to have another CPI. And then even until the inauguration, there's probably going to be a lot of things. And then the whole point is the inauguration is going to start bringing in real policy and changes that we are going to be able to go off of. So yeah, you could just add it to the whole bag of, oh wait, what's going to happen? And it will add fears and some of this uncertainty in figuring out if the bonds bottom or not. But I really do think we are going to pay more attention to the CPI closer to the end of the year. So watch out for that. That is key number 2. And I think we get that on Tuesday or Wednesday. There's even retail sales and some other data this week as well. And then finally, crypto and oil. So crypto already going crazy over the weekend, and I think both of these things are going to make waves. And I want to tie it in because it is similar to a lot of these Trump trades and all of the stuff going on, but they both kind of have unique qualities to them that make them a little bit different. So crypto right now, they are running on deregulation and the impact of the dollar on other currencies. You would think a strong dollar would bring down Bitcoin. No, a strong dollar is bringing down everybody else, but this gives you a reason to be going into Bitcoin, especially if you're in one of these currencies, even if it is UK or Europe. That's some of that stuff we're talking about of getting ready for what is about to happen. That's one part. Mix it in with the deregulation and actually getting favorable rules for crypto. That's why it's going crazy. So it's playing its own little area. It's kind of linked to the general trades, but like I'm saying, how it responds to the dollar and regulation, it's definitely more turbocharged. And then oil, this is going to respond to geopolitics, whether things get better or worse. But then also you got to realize cheaper oil is going to be a net positive for the world. So even if we start drilling the drill baby drill, but also other policies around, oil might be able to go up, and that'd be bad, especially as a signal of inflation, but it should start to drop if we really do start to produce more. And the fact of the matter is, China will benefit off of this alongside their stimulus. Yeah, they might lose out on tariffs, but really cheap oil would actually take them a much longer way. So these are going to be things we're going to be watching out for, because crypto and oil, this is going to give you signals to more of the rest of the world. And then oil, watch that for a broader inflation warning, but also too, watch that as a tailwind for China or anything overseas if oil does get a lot cheaper. So those are going to be the themes, I think, in the background over the next few months. Other than that, though, we take it in the next couple weeks. We see where this rally leads us, and now no more earnings and everything else. All it is I hope you got a lot, Tar, but now let us get into the plays. So, right off the bat, I got a couple of different plays, and this is what I was talking about up there with the long duration, and I'm starting off with IBB. If you have any other ones, you can post it below, but biotechs. So if we do watch a bottoming out of bonds in the next few weeks, keep your eye out for it. There's no guarantee. Again, it depends how all these things play out, but if we do start to watch a bottom in bonds, I don't think people are talking a lot yet about biotechs, and this could be one of those long duration plays that really does good. So as long as the yields stop rising, I think biotechs will be another one of these opportunities that you could add to the list of everything else going on. So watch out for that. That is play number 1. Then play number 2, retail stocks. This one kind of surprising. The Nikes and Lulus and everything in between, the Ultas and Ralph Lauren. I'm sure you could think of a lot of these names, but they might actually do good. They did pretty bad this last quarter. A lot of them sold off. Nike even sold off some of their gains, but analysts were just getting positive on this over the weekend. And then if you go look at XLY discretionaries, this is part of the inflation trade, whether it's Trump economic boom or worried about deficit and inflation and prices going higher. You could see that the discretionaries are finally breaking out from 2022. So I think this is pretty important here. I think it's going to feed in to some of those retail stocks. So keep your eyes out for it. I'm going to be watching out for that this week, especially if we start to see this Trump trade really get out of hand and everybody is just eating everything up. So watch out for that. That's play number 2. And then finally, play number 3, this one, I don't know if it's surprising or not, but DJT. Believe it or not, I am still pretty sketched out by the fact that this stock is a SPAC. I haven't really been the biggest fan of Truth Social, but up until the inauguration, I think this stock is going to keep moving back and forth. On Friday, Trump said he has no plans of selling shares. You're probably going to be hearing a lot of updates back and forth in terms of what's going to happen with this. And then as far as like utility, I don't know how many people that use Truth Social, but Trump still keeps putting out his updates on Truth Social. So like right now, we'll see if he keeps doing this. I mean, he could use Twitter and everywhere else, but this is where he posted. So like, what's the utility? it's like the only place to actually verify if he says something, if it's not his Twitter or anything else. So take that as far as you want to. I don't think this is going to be a play that you hold in your long term, but over the next few weeks, if the market's going crazy, we have 10% upside on the SPY, and it's all based off of this election. I think this stock that's right in the middle of it is going to react. So I'll go over my plays here in a second, but watch out for that. That is play number 3. And then finally, as far as everything else, these are the plays that I made on Friday. Those TLTs after Powell or during Powell, we made that play there. I grabbed the November 15th, the 93s. They went up like 60%. They ended up going up like 150. I sold out after like 60. I got most of my money back. I sold 6 out of 10. Got my money back on that one. Then I sold my free Palantir contract. Got like 200 or 300%. Wasn't bad. It was only like $40 though. Spent like $8 for the contract. And then I flipped the DJT shares. I grabbed them at like $30. I grabbed 100 of them, sold them out at like $32.80 or something, and got like $280 back. And then with that profit, I bought a November 15th $47 call on the stock. So I still walked away with like 130 profit because we got 280 from the shares. And then I said, you know what, throw it in there just in case anything happens. And then 47 strike. He's the 47th president. So what do you want me to do? I know. So there you go. But other than that, I'm still riding out the bond plays. I may adjust my target on that. I know I was saying 4.5 and we got there and I made those option plays, but for some of my futures, I'm kind of thinking 5 now. That seems to be the breaking point. I brought that up there earlier on the list, but hearing other people talk about it, I think 4.5 is the range, and we saw a little bit of activity, but now given everybody's like going crazy, maybe adding an extra 0.5. So we'll talk about it over this week and see. Other than that, though, I am going to keep an eye on a couple of earnings plays, but let's get a couple of these smaller ones, maybe go near the money if we keep watching this melt up continue and see where it takes us. But Chad, that is your watch list, ladies and gentlemen. Make sure Hydrate Healthy ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. And I need you to remember, you got to make good decisions. Take authority. Save. If you fall off of the path, you get right back on. Don't uproot the money tree. Save that 10%, Chad, and take it home. You got a whole nother 4 years, 8 years, 10 years. A lot of opportunity. But, Chad, drink that water, stay hydrated, healthy, all that good stuff. I'll see you in the morning and horn.